Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Thursday. We're at the 9th of February, 2023, and what an interesting day. You know, the market gets what it wants, gets the stellar performance from Disney. By the way, Disney didn't hold up at all. You can see down $1.40, got as high as $1.18. Wow. Unbelievable, and went right to the Bollinger Band, and that's what ran into its nightmare. Funny action. Then it lost in the marketplace, the embedded reading in a number of stock indices. They could be going back to their 18-day averages or lower, but they have to recoup. It got what it wanted in the unemployment claims, the jobless claims. They went up 16,000, more than the estimate that was coming out there. And the continuing claims climbed again. So they got what they wanted there. It didn't hold the market together. Markets do what they want when they want out of nowhere. A very big surprise was watching in Mexico, their central bank, raise interest rates. Not only raise them, a half a point. That was on nobody's. I mean, nobody that I know was looking for them to do anything like that. That was the big surprise. And why did they do it? Because they're not getting what they want out of controlling the inflation. And, you know, we're going slower, and I don't know why. Why not kick it, okay? That'd be my opinion. Kick it. The economy's so strong. When are you going to get another chance to kick it when you got 3.4% unemployment? Tell me when. When do you want to do it? When you're at 5% unemployment and then take it? You take advantage of situations, but that's my opinion. It's also why I'm not a Fed member, right? They're much smarter than I am, and I appreciate that. But as I said, is this a psychology shift? I'm reading more and more about people in the Fed fund futures buying out to the 6% number. Admitted, you know, that's not in favor, but I'm reading some big money placing bets back there saying that the 5.1 number that was on the dot plot that a lot of people think we're going isn't high enough. Now, remember, March 22nd, we're going to get a new series of dot plots too, but today's February 9th. That's a long way off and a lot of data between now and then. When I look at the S&P, I told you, let's take off today's action just so that we can together look and see what we have. I said, you're consolidating. Are you going to break out of the top side or the bottom side of this? I know that's exactly what I told you yesterday. So what did it do today? It came out the downside. No, what does that mean? Let's go to the next chart. You now have lower highs, lower lows. Have you taken my outside day down course? An outside day is when you take out the previous day's high and low. Down means that you've taken them out, you've closed lower on the day. Outside day up, you've taken the high and low out, you closed higher. And there is a distinct thing that happens with it, and I teach it in the course. If you want to learn more, just move your cursor up here at any time, go to the education, it'll take you right there, an icon, give it a click, it'll take you to the section that you need. That course, you see these patterns all the time. This is one of the most, most often patterns that you're going to see. And you've got another one of those days, and it's very important. You had an outside day here. You've taken out let me explain this to you. You've taken out the low of an outside day up 2 days later. It's a big failure number. So we'll see it happens. In order to prove this wrong, you'd have to go over that high 2 days from now. I don't think you're going to do it. That's my guess. I think instead you're going right to this 18-day average. And from there, the question is, do you want to attack these numbers or do you just run into a brick wall at that? But you've taken the upside momentum out of the market. Did you hear what I just said? You've taken the upside momentum out. It's gone. Can it be reinstated? Of course, anything can come back, but for the time being, the bears have regained control. It happened again against the Bollinger Bands like it's happened before. My target's that 18-day average, and you lost the embedded reading. So now you have an overbought market. Overbought markets either re-embed or overbought markets break to get both these numbers underneath 70. Got it? UGA, the gasoline fund, All right. Now, some of my traders, and they've been writing me, Ira, I think I got it. Well, this is it. This is the one that you look, and what I want to see is the market stay under the 18-day average and do a little bit of spinning here before we get ready to see anything move up. And then we're going to need to see a reason for prices to move up. I'm reading an article right now that I got in a newspaper that came to me, and I've never seen the newspaper, so I don't know if the article's trustworthy or not, but it's a nice-looking newspaper. And it's all about finance, and they're claiming that it now costs more to run an electric car where gasoline prices are than it does a traditional combustion engine. So I'm going to read it. I'll probably put excerpts of it in my newsletter, and I'll let my clients see what these people are saying. But I can get it to a certain degree. You know, electricity isn't free. And, you know, when you buy a car, you also got to buy the charger and other things. If they're saying that's involved in it, I don't care about that. Then I don't agree with the article. I want to know what it costs to fill up and go 100 miles or 300 miles, electricity versus gasoline. That's what I want to know. In Apple, as I told you, I don't trust this. I don't like this chart formation at all. You lost the embedded reading today. I see the market dropping down maybe to the 200-day average, back to 147.56, if not lower, in short order. Well, so much for selling higher-priced seats. The market rallied on the news, got up to 633. It's now down $1.50. Folks, that's a 30% drop in the value. And right back. So that didn't do it. I mean, I like the idea, but then I thought about it and I said, well, tickets are already pretty expensive. Will people do that? Are they shutting down their market even further? They're trying to goose them. I don't know. I think the best thing a movie theater could do is an intermission. I know you found that crazy. Have an intermission. The intermission puts people back where the profit center in the theater is, the concession stand. I don't care if you're into a dine and brew theater. You get grabbing another beer. You're doing whatever. Okay, and you'll say, well, you're disturbing the movie. You want to stay in business or you want to disturb the movie? XLF, higher high, lower low. You lost the embedded reading. It's market after market today. Can you get these readings back with a big update tomorrow? In some cases, you can. Some you can't. They've broken too much. This one with this reading could, if we had a big update. This is a problem for this market. XLI lost the embedded ability. I can go on and on. SOX lost the embedded ability. Okay. Could they get them back? I'm going to repeat. Yes, when you're in the mid-70s, you can get it back if you had a big update tomorrow. Barring that, you've opened the door on all these to go back to the 18-day average of closes. What do you think I would tell my subscribers, my paid subscribers, when you lose the embedded reading? They're not waiting for tomorrow to find out. They're gone. Today, they should have gotten out of anything that was embedded that I had them in, and they clear the decks, and we're happy. You've been long, as an example, if you were in SOX and you were long, okay, so you're coming out of the market on a day like today. What's wrong with that? You're not down very much. Same in the S&P, the QQQ, all the same. Now we take a look here. You had lost this reading back here. I still think you're going to the 18-day average of closes. XLE, no, you were oversold. You've had a bounce, but energies haven't come alive. To get me bullish this market again, I need a close over 88.99. There's no sell pattern anymore, but there's no reason to be long. The numbers have been hit. GLD, is this going to accelerate down? You have an outside day down today. Learn to work with outside days. It's so darn important. They're sort of like, in its own manner, another form of the tool of the enhanced Bollinger Band. Because, you know, when you lose that reading, the odds of where you're going to go. Well, with this, it's a continuation pattern with but one set of variables, and I won't teach you that set here. Outside day down in silver. You're into the objective already. You could go into these. There's no reason to be bucking this market. It's still looking bad. Copper, outside day down. How do you work outside days? Because they give you an edge in a market if you know what to do with them. At least I think they do, and I teach that in the course. I'm not creating all these outside days to sell my course. They're happening on their own. You've gone from the upper band to the lower band. I want no part of that market. On UUP, to me, the sucker play is buying over this number. How often do you stay over a Bollinger Band? 5% of the time. But your nature is going to be, this is when it's going to go. For the one time you're right out of 10 or 20 events, it's not worth it. FXE, you don't stay short under the Bollinger Band. You're oversold. These aren't buy signals. They're signals in this not to be short and in the dollar not to be long. And you put it together, you come up with the game plan, and I'm begging you to learn some of these techniques. So if you want to learn them, just follow my finger up here, give it a click on the cursor, go and take a look at the outside day course. I think you'll learn quite a bit with that one too. And that's where we're at with things. It's also on our website at iraepstein.com under education. With that in mind, I'm going to go have dinner. You have a great evening. Take care.